You might think the money in your bank account is safe, static, and reliable, but that is a dangerous illusion that we must shatter right now. We are standing at the precipice of the most significant financial shift in human history, a tectonic movement that will redefine how value is measured, how nations trade, and who truly holds the power in this world. The era of the unipolar world, where one single currency dictates the fate of the global economy, is coming to an abrupt and necessary end. We are witnessing the undeniable rise of the global south, led by the BRICS alliance, and they are not just asking for a seat at the table, they are building a completely new table, based on fairness, tangible assets, and sovereign respect. If you do not understand the rules of this new game, you are playing blind in a minefield. But if you wake up to this reality, you position yourself to stand tall while others fall. We must cut through the noise and look directly at the signal. The headline is not just about a new currency or a summit meeting. It is about the fundamental weaponization of finance that has forced the hand of the world's emerging economies. For decades, the global financial system has operated like a toll booth owned by a single landlord. Every time you wanted to trade, to buy oil, to sell rice, or to move capital, you had to pass through this toll booth, pay a fee, and arguably more dangerously, ask for permission. This system worked when the landlord was benevolent, but the moment finance became a weapon of war, the trust evaporated. When major global powers realized that their sovereign assets could be frozen or seized overnight due to political disagreements, the psychological contract of the fiat dollar system was broken. This is the why that drives everything we are seeing today. It is not out of malice, it is out of a desperate and disciplined necessity for survival and sovereignty. Let's dig deeper into the foundation of this shift, because superficial explanations are useless to us. We need to apply a rigorous analysis to understand the root cause. Why is BRICS moving with such speed and coordination? It is because the United States national debt has spiraled out of control, crossing the incomprehensible threshold of $34,000 billion. This is not just a number on a screen. It represents a mathematical certainty that the purchasing power of the currency must degrade over time. The nations of the East and the South, who produce the world's real goods, the oil, the grain, the microchips, and the raw materials, are no longer willing to exchange their sweat and resources for paper promises that are losing value by the second. They are demanding a return to reality. They are demanding a system where trade is settled in something real, something that cannot be printed into oblivion by a central bank thousands of miles away. This brings us to the core of the strategy, which is the return to real assets. You must understand that this is not a regression to the past, it is a strategic evolution to secure the future. When we look at the data, it screams the truth at us. According to the World Gold Council, central banks, particularly the People's Bank of China, have been net buyers of gold for over 18 consecutive months. They are not buying gold to make jewelry, they are buying it to build a fortress. They are converting their trade surpluses from decaying fiat currency into the only asset that has no counterparty risk. This is a disciplined, calculated move to inoculate their economies against external shocks. By anchoring their reserves in gold, they are sending a clear signal that the future of finance will be backed by collateral, not by credit. We need to contextualize this historically to truly grasp the magnitude of the moment. Think back to 1944, to the Bretton Woods Conference. That was the moment the United States, standing as the only major power untouched by the ravages of World War II and holding the vast majority of the world's gold, established the dollar as the global reserve currency. It was a logical move for that specific time in history, but we are now living in a Bretton Woods 3.0 scenario. The economic gravity has shifted. Today, the BRICS bloc accounts for over 37% of the global GDP when adjusted for purchasing power parity, PPP, surpassing the G7 nations. The producers have become the power brokers. It is an inevitability of history that the financial system must align with the economic reality. You cannot have a 20th century financial structure governing a 21st century multipolar economy. It simply doesn't fit, and the friction we feel today is the sound of the old system grinding against the new. Let's talk about the specific mechanics of this revolution, because this is where the genius of the strategy lies. It is not just about hoarding gold, it is about building the technological infrastructure to bypass the old gatekeepers entirely. We're talking about projects like mBridge, a multi-central bank digital currency project that is revolutionary in its efficiency. In the old system, sending money from a business in Vietnam to a partner in Russia or Brazil could take 3 to 5 days, passing through multiple correspondent banks, each taking a cut and adding a layer of compliance risk. With the new blockchain-based systems being developed by the BRICS coalition, that same transaction settles in 2 seconds. This is not just an improvement, it is a quantum leap. It eliminates the friction of trade. It creates a direct peer-to-peer relationship between nations. It is a declaration of independence through technology. We must also address the mindset required to navigate this. A lot of people hear this information and they react with fear. They think the sky is falling. But you must react with the mindset of a strategist. This is not the end of the world. It is the beginning of a more balanced world. The dominance of a single currency was an anomaly in human history, not the norm. Returning to a multipolar system where multiple currencies compete for trust is actually a healthy development. It forces fiscal discipline. If a country wants its currency to be used internationally, it must treat that currency with respect. It cannot print endlessly. It cannot weaponize it. This competition will ultimately benefit anyone who produces real value. The free rider era is over. The era of show me the value has begun. Consider the narrative of the Vietnamese rice exporter to truly humanize this shift. For years, this business owner lived in constant anxiety. He would sell his high-quality agricultural products to international buyers, but he was entirely at the mercy of the exchange rate between the Vietnam dong and the US dollar, and then the US dollar and the buyer's currency. If the Federal Reserve in Washington decided to raise interest rates to fight their own domestic inflation, the ripple effect would crash into this Vietnamese exporter's margin, wiping out his profit through no fault of his own. He was a passenger in a car driven by someone who didn't care about his destination. Now imagine the future that is being built. He sells rice to China or Russia. He gets paid in a digital currency that is instantly convertible or even pegged to a basket of commodities. The volatility is dampened. The transaction is immediate. He regains control over his economic destiny. This is the liberation that the new system promises.
We must be absolutely clear that this transition will not be smooth sailing every single day. There will be pushback. There will be volatility. The old guard will not give up its privilege without a fight. But the momentum is irreversible. When you have the world's largest factory, China, the world's gas station, Russia, and the world's pharmacy, India, all aligning their interests, the gravitational pull is too strong to resist. They are building a parallel system. They are not trying to destroy the dollar. They are simply rendering it irrelevant for their mutual trade. If two neighbors want to swap eggs for milk, they do not need to ask the permission of the banker down the street. That is the essence of what is happening. It is a return to the fundamental simplicity of commerce, supercharged by modern technology. You have to look at the energy markets to see the final nail in the coffin of the old system. The petrodollar, the agreement that oil must be sold in dollars, was the bedrock of American financial dominance for 50 years. But look at what is happening now. Saudi Arabia is open to trading in other currencies. The UAE is joining the BRICS alliance. When the energy trade decouples from the dollar, the structural demand for that currency evaporates. This is a mathematical certainty. It means that the billions of dollars that were previously held in reserves by foreign central banks just to buy oil will eventually come home. This is why we must be vigilant. This is why we must understand that the inflation we see is not transitory, it is structural. It is the sound of the currency losing its global utility. However, we must remain strictly objective and avoid the trap of emotional bias. We are not cheering for the collapse of anyone. We are cheering for the rise of resilience. The United States is still a powerhouse with incredible innovation, military strength, and cultural influence. The dollar will not vanish. It will not become zero, but it will become just one of many options. It will lose its exorbitant privilege. We are moving from a monopoly to a marketplace, and in a marketplace, you have to compete. This is good for the world. It means that nations must compete on productivity, on stability, and on trust. It levels the playing field for developing nations like Vietnam, Brazil, and Indonesia. It gives us leverage, it gives us options, and in the world of finance, options are the most valuable asset you can hold. Let's analyze the unit, the proposed common currency or accounting unit for the BRICS nations. Skeptics say it is impossible to unite such different economies under one currency. They point to the euro and say, look at the problems there. But the BRICS planners are students of history. They are not trying to replace their national currencies. The rupee, the ruble, the yuan will still exist for domestic use. The unit is designed to be a settlement mechanism for international trade, backed by a basket of commodities, gold, oil, rare earths. It is strictly for settling the balance of payments. This solves the Triffin dilemma that has plagued the US dollar. It allows trade to flow without forcing one country to run a deficit to provide liquidity to the world. It is a brilliant, technically sound solution to a problem that has existed for 80 years. We must also recognize the role of discipline in this new era. The countries that will succeed are those that focus on the real economy. The financialization of the economy, where money makes money without creating value, is a dying model. The future belongs to the makers, the builders, the farmers, and the engineers. The BRICS alliance is heavily weighted towards the real economy. They produce the things that humans physically need to survive and thrive. In a crisis, you cannot eat a derivative contract. You cannot heat your home with a stock option. You need food. You need energy. The valuation of these real assets is set to explode upwards relative to financial assets. This is the trend you must position yourself for. Therefore, the foundation we are building in our minds today is one of absolute clarity. We see the chessboard. We understand that the pieces are moving. We are not distracted by the daily noise of political theater. We are focused on the underlying currents of money, energy, and technology. The long march of the global south has begun, and it is a march towards dignity and autonomy. We are ready to embrace this change because we are prepared for it. We are not afraid of the multipolar world. We welcome it because it brings balance, and where there is balance, there is stability. Where there is stability, there is growth. The path forward requires us to be as hard as steel in our convictions, but as fluid as water in our tactics. We must be ready to pivot. We must be ready to learn. The old textbooks are obsolete. The new curriculum is being written in real time by the actions of these emerging powers. By understanding the why and the how of the BRICS revolution, we have laid the first layer of our intellectual defense. We have stripped away the illusions. Now we stand on the solid ground of reality, ready to build our strategy for prosperity in this new world order. We are just getting started. The foundation is set. Now we must look at how to navigate the storm that comes before the calm. Visualizing the current financial architecture is essential because you cannot dismantle what you cannot see. Imagine the global economy as a massive, sprawling highway system connecting every nation on Earth. For the last 80 years, there has been only one major bridge to get from the east to the west, from the south to the north. This bridge is the SWIFT system, and right in the middle of it sits a heavily fortified toll booth owned and operated by the United States. For decades, the toll was reasonable, and the traffic flowed smoothly. We paid the fee because the bridge was safe, wide, and convenient. But recently, the operators of this toll booth have started doing something alarming. They have begun arbitrarily closing the gates. They stop cars based on political license plates. They freeze the cargo of nations they disagree with. Suddenly, the world realized that this bridge is not a public utility. It is a choke point. This is the terrifying reality that has kept leaders in the global south awake at night. They realized that their entire economic livelihood depended on a bridge they did not own and could not control. The BRICS alliance is not trying to blow up this old bridge, contrary to the sensationalist headlines you might read. Destroying the old bridge would cause chaos, and these leaders are calculating strategists, not anarchists. Instead, they are doing something far more ingenious and harder to stop. They are digging a tunnel. Deep underneath the turbulent waters, where the toll booth operators cannot see and cannot reach, they are constructing a high-speed digital hyperloop. This is the metaphor you must lock into your mind. The tunnel is the blockchain-based payment system, often referred to as mBridge or BRICS Pay. In this tunnel, there are no checkpoints. There are no political officers checking your cargo. There is only code, mathematics, and instant settlement. While the traffic on the old bridge is stuck in jams of compliance and sanctions, the traffic in the tunnel is moving at the speed of light. This is not a future fantasy. The tunnel is being bored right now, mile by mile, by the best engineers from Shanghai to Mumbai, from Moscow to Saudi Arabia.
Let's zoom in on the human cost of the old system to truly feel the weight of this change. Think about a mid-sized construction company in Brazil. They win a contract to build infrastructure in Africa. They need to buy heavy machinery from China and steel from India. In the dollar-dominated world, every single one of those transactions has to route through a bank in New York. The Brazilian real is converted to dollars, fees are taken. The dollars move to New York, fees are taken. Then the dollars move to Shanghai and are converted to yuan, fees are taken again. It is a slow, bleeding process. But the real fear is not the fee, it is the freeze. If a politician in Washington decides that the specific project in Africa is against their geopolitical interest, they can flip a switch and that Brazilian company's funds are frozen in transit. The machinery sits on the dock, the workers go unpaid, the project dies. This is the weaponization of finance that destroys real value. The new BRICS system promises a direct line. The real converts directly to the yuan or settles in a neutral gold-backed unit. No New York stopover, no political risk. The machinery moves, the bridge gets built. This is the liberation of commerce from politics. We are witnessing the birth of Bretton Woods 3.0, and the distinction is critical for your understanding of where value is heading. Bretton Woods 1.0 was gold-backed, it had discipline. Bretton Woods 2.0 was debt-backed, the petrodollar. It relied on trust and the promise of future payment. Bretton Woods 3.0, the era we're entering, is asset-backed. The pendulum is swinging back to hard reality. In a world drowning in debt, credit is no longer king, collateral is king. The BRICS nations are essentially saying, we do not want your IOUs anymore. We want something that hurts if you drop it on your foot. This is why we see the strategic accumulation of commodities. It is a shift from the financial economy, where fortunes are made by trading paper, to the resource economy, where power is derived from controlling the energy, the food, and the metals that sustain life. If you are an investor, you must ask yourself, do I own things that can be printed, or do I own things that must be mined, grown, or built? There is a profound psychological shift happening in the global south that the Western media often misses or dismisses. It is a restoration of civilizational confidence. For 2 centuries, the East and the South were told that they were secondary, that they had to follow the rules set by London or Washington. That era is psychologically over. When you listen to the speeches coming out of these summits, the tone is not submissive, it is assertive. It is the tone of a partner who knows their worth. They know that without their rare earth minerals, there are no electric vehicles in California. They know that without their oil, the factories in Europe grind to a halt. This realization is the catalyst for the financial revolution. You cannot have political independence without financial independence. The BRICS currency project is, at its heart, a project of dignity. It is a declaration that our value is determined by us, not by a rating agency in New York. This emotional energy is a powerful fuel that will drive this project forward through any technical obstacles. Let's apply a contrarian perspective here to sharpen our thinking. The common narrative is that this is anti-West. That is a lazy interpretation. A more sophisticated view is that this is pro-diversity. Just as a biological ecosystem is healthier with many species, a global economy is healthier with many settlement options. Paradoxically, this competition might actually save the West from its own excesses. When the dollar has no competition, the U.S. government can run deficits of $2 trillion a year without immediate consequence. It enables bad habits. But when there is a viable alternative, a gold-backed yuan or a BRICS unit, the dollar must discipline itself to remain attractive. The rise of BRICS forces the U.S. to stop printing reckless amounts of money if it wants to keep capital onshore. So, in a strange twist of fate, the actions of China and Russia might be the only thing that forces fiscal responsibility back into Washington. Competition breeds excellence. Monopoly breeds complacency. We should welcome the competition. Consider the network effect, which has always been the dollar's strongest defense. People use the dollar because everyone else used the dollar. It was a self-reinforcing loop. But network effects work both ways. Once a critical mass creates a new network, the migration can be exponential. We are seeing this with the expansion of BRICS+. It started with 5 countries. Now it's adding Iran, Egypt, Ethiopia, the UAE. Every new member adds a node to the network. Every new member brings their own trade partners. Suddenly, the tunnel is not just a small escape route, it becomes a massive underground city of commerce. When Saudi Arabia, oil, and China, manufacturing, can trade directly, the gravity of the entire system shifts. The network effect is flipping. The risk is no longer not using the dollar, the risk is becoming the last person holding the bag in a shrinking network. We must also talk about the technology because it is the enabler of this entire vision. Without blockchain and distributed ledger technology, this would all be talk. In the past, trying to create a competing currency required trusting a new central bank. Who trusts the Russian central bank? Who trusts the Chinese central bank? Trust was the barrier. But technology solves the trust issue. With a decentralized ledger, you don't need to trust the other party, you just need to trust the code. The unit can be programmed so that it is automatically backed by gold stored in neutral vaults. The smart contract executes the trade only when the conditions are met. This trustless architecture is what makes the BRICS alliance feasible. It allows countries that might be historical rivals, like China and India, to cooperate on a financial platform because the platform is neutral. It is governed by math, not by a Politburo. Let's look at the timeline, because patience is a warrior's virtue. This will not happen overnight. The dollar will not collapse next Tuesday. We are looking at a decade of transition. It will be messy. There will be 2 parallel systems running side by side. You will need to be bilingual in finance. You will need to understand how to operate in the fiat world and how to operate in the hard asset world. The savvy business owner will maintain accounts in both systems. The smart investor will hedge their bets. Think of it like the transition from horses to cars. For a long time, they shared the road. The horses were still useful, but the cars were the future. Right now, the dollar is the horse, reliable, familiar, but limited. The asset-backed digital currencies are the cars, still early, maybe a bit clunky, but infinitely more scalable. Do not bet against the car. Now, I want to address a specific actionable concept: personal sovereignty. Just as nations are seeking sovereignty, you must seek it for yourself. If your entire net worth is in one currency, in one country, in one banking system, you are as vulnerable as those nations were before BRICS. You are a vassal to that system. The lesson from the BRICS revolution is diversification. It is about spreading your risk. It is about owning assets that have no jurisdiction, like physical gold in your own possession or Bitcoin in a cold wallet. These are sovereign assets. They answer to no one but you. The macro trend of the world is decentralized sovereignty. You must align your micro strategy with this macro trend. Do not wait for the government to tell you to protect yourself. They never will. The responsibility is yours, and yours alone. We also need to debunk the myth that the West will be excluded from this. Money has no ideology. It follows the path of least resistance and highest return. Eventually, Western banks and corporations will plug into the BRICS payment system. Why? Because they cannot afford to ignore a market of 4 billion people.
Germany wants to sell cars to China. France wants to sell luxury goods to the UAE. If the buyer says, "We pay and BRICS pay," the seller will find a way to accept it. Greed is a powerful bridge builder. We will likely see a hybrid system emerge where Western financial institutions create gateways into the BRICS network. The irony will be palpable: Wall Street banks facilitating the very system designed to bypass them, simply to capture the transaction fees. This is the ultimate proof that the shift is real. Even the incumbents will eventually capitulate to the new volume. Deep dive into the commodity supercycle. History shows us that commodities move in long cycles. We have just exited a long period of underinvestment in oil, mining, and agriculture, driven by cheap money and a focus on tech stocks. Now, supply is tight. Demand from the global south is exploding as they urbanize. The BRICS nations control the supply. This creates a perfect storm for higher commodity prices. The currency they launch will be pegged to these rising assets. This creates a positive feedback loop. As commodities rise, the BRICS currency strengthens. As the currency strengthens, it attracts more users. It is a brilliant mechanism designed to transfer wealth from the consumer nations, West, to the producer nations, East/South. This is not just inflation, it is a wealth transfer. You need to be on the receiving end of that transfer, not the paying end. Finally, in this section of the art, we must touch upon the narrative warfare. You will hear constant negative news about BRICS in mainstream Western media. They will call it fragile, disorganized, authoritarian. You must learn to read between the lines. Every time they attack it, it is a sign of fear. Valid, strong systems do not need to constantly attack their competitors. They simply outperform them. The intensity of the negative press is actually a bullish signal for the BRICS alliance. It confirms that they are a genuine threat to the status quo. Be a critical thinker. Look at what they do, not what they say. Watch the gold flows, watch the energy deals, watch the central bank digital currency pilots. The actions speak of a unified, relentless march towards a new order. We have now painted the picture. We have seen the toll booth and the tunnel. We have felt the frustration of the frozen cargo and the liberation of the instant settlement. We have understood that this is a battle for dignity and a return to asset-based reality. The art of this revolution is that it is not a destruction of the old, but a construction of the necessary new. It is an evolution that is as natural as a river finding a new path to the ocean when the old one is blocked. In the final part of our journey, we will synthesize all of this into a concrete action plan. We will answer the question, so what do I do tomorrow morning? We will turn this high-level geopolitical analysis into a personal roadmap for wealth preservation and growth. The knowledge is now yours. The application is next. Knowledge without execution is merely entertainment, and we are not here to be entertained. We are here to survive and thrive. Now that you understand the tectonic plates of the global economy are shifting from a debt-based Western model to an asset-based Eastern model, the burning question is, what do I do with my money tomorrow morning? The first step is a radical mental pivot regarding what you consider safe. For 40 years, safety meant U.S. Treasury bonds or cash in a savings account. Today, in an environment where the issuer of that currency is weaponizing it and debasing it, those so-called safe havens are actually guaranteed loss vehicles. They are the boiling pot, and you are the frog. Real safety now lies in asymmetric hedges. This means holding assets that have limited downside but unlimited upside as the new system comes online. You must become your own central bank. You must build your own reserves. This brings us to the 10 to 15% rule of physical insurance. I am not telling you to sell everything and live in a bunker. That is panic, not strategy. I am telling you to take 10 to 15% of your net worth and convert it into physical gold or silver. Notice I said physical. Do not buy an ETF or a paper contract that promises you gold. In a crisis, paper burns. If you cannot hold it in your hand, you do not own it. You merely own a claim on a counterparty who might bankrupt.
Physical precious metals are the only financial assets that are not simultaneously someone else's liability. When the BRICS currency launches and is backed by gold, the price of the metal will not just rise, it will likely be revalued to a level that balances the massive global debt. By holding the physical metal, you are front-running the central banks. You are buying the insurance policy before the house catches fire. It is disciplined, it is prudent, and it is historically proven. We must also talk about the digital equivalent of gold, Bitcoin. Whether you like it or not, Bitcoin has established itself as a neutral, decentralized store of value that no government can print and no bank can freeze. It is the swift alternative for the individual. While BRICS is building a tunnel for nations, Bitcoin is the tunnel for you. It operates outside the traditional banking system, just like the proposed BRICS currency. A small, calculated allocation to Bitcoin, perhaps 1 to 5%, acts as a call option on the failure of the fiat system. If the dollar collapses or if capital controls are imposed, your Bitcoin can be carried across any border in your head via a seed phrase and accessed anywhere in the world. This is the ultimate form of financial sovereignty. It is not about speculation, it is about having an exit door that nobody can lock. For the entrepreneurs and business owners among us, the strategy must be supply chain sovereignty. If your business relies 100% on imports from the West or payments in dollars, you are vulnerable. You must actively diversify your suppliers. Look to Vietnam, India, China, and Brazil. Open accounts that can handle yuan or other local currencies. If you are a Vietnamese exporter, negotiate contracts that allow for payment in non-dollar terms if necessary. By doing this, you reduce your exposure to the weaponization of the dollar. You become anti-fragile. When your competitors are panicking because their dollar accounts are frozen or the exchange rate has spiked, you will continue to trade because you built the pipes to the new reservoir ahead of time. This is not just logistics, it is a strategic defense mechanism for your livelihood.
Let's look at the future roadmap, specifically the rise of central bank digital currencies, CBDCs. This is the double-edged sword of the new era. While BRICS nations are moving away from the dollar, they are also moving towards total digital surveillance of their own populations through CBDCs. The digital yuan, or digital ruble, is programmable money. It can be set to expire. It can be restricted to certain purchases. This is why having sovereign assets like gold and decentralized crypto is so vital. The future will likely be a split between state money, CBDCs, used for taxes and daily tracking, and freedom money, gold and Bitcoin, used for savings and private trade. You must learn to navigate both. Do not blindly accept the convenience of a CBDC without understanding the loss of privacy it entails. Keep a portion of your wealth off the grid of the state surveillance apparatus. We need to address the skill arbitrage in a resource-based economy. In the dying financial economy, the highest-paid people were those who moved paper around: bankers, lawyers, consultants. In the rising resource economy, value shifts to those who can build, grow, fix, and create real things. Engineers, agriculturalists, energy experts, manufacturing specialists. These are the professions of the future. If you are young or if you are guiding your children, steer them towards hard skills. The world is drowning in marketing managers, but starving for people who can build a lithium battery plant or optimize a rice harvest. The BRICS nations are focused on the real economy. Align your skills with the real economy. If you solve real problems in the physical world, you will always have purchasing power, regardless of what currency is being used to pay you. Let's zoom out to the geopolitical horizon to find our optimism. This shift is actually a massive opportunity for the global south, including countries like Vietnam, Indonesia, and Thailand. We are the swing states of the new order. Both the West, G7, and the East, BRICS, want us on their side. This means investment will flow in, factories will be built, infrastructure will be upgraded. We are entering a golden age of development for emerging markets. If you are living in one of these countries, do not look for the exit, look for the entrance. The growth is happening right here. The capital is moving from the stagnation of Europe to the dynamism of Asia. You are in the right place at the right time. You just need the right mindset to seize it. Stop looking at the US stock market as the only game in town. The real growth stories for the next 20 years will be written in the emerging markets. Beware of the FUD, fear, uncertainty, and doubt that will intensify. You will hear rumors of war, of collapse, of cyber attacks. Much of this is noise designed to paralyze you. A disciplined mind filters out the noise. When the news says gold is dead, you buy more. When the news says BRICS is failing, you check the trade volume data which says otherwise. You must become a contrarian. The majority is almost always wrong at major turning points in history. The majority bought tech stocks in 1999 just before the crash. The majority bought houses in 2007 just before the crisis. Today, the majority trusts the fiat dollar. Do not be the majority. Be the minority that understands the math. The math says the debt is unpayable. The math says the shift is inevitable. Trust the math, not the headlines. To synthesize everything we have discussed, we are moving from a unipolar, debt-based, dollar-dominated world to a multipolar, asset-based, pluralistic world. The transition will be volatile, but the destination is a more honest global economy. Your personal roadmap consists of 3 pillars. Diversify your assets into physical and sovereign holdings, gold and Bitcoin. Align your business and skills with the productive real economy of the global south, and educate yourself continuously on the new tools of trade, blockchain, and alternative settlements. This is not a passive strategy. It requires action. It requires you to go to the bank, to open the wallet, to learn the new software. It demands discipline, but the reward is the safety of your family and the preservation of your legacy. We are standing at the station, and the train of history is leaving. The old ticket, the dollar, might still get you a seat for a few more stops, but it won't get you to the final destination. The new ticket is hard assets and sovereign control. You have the knowledge now. You have seen behind the curtain. The BRICS financial revolution is not just a news story, it is a call to action for every conscious individual on this planet. The old guard is banking on your ignorance. The new guard is banking on your participation. Which side will you choose? Will you cling to the fading safety of the past, or will you build the fortress for your future? So, I leave you with this one question, and I want you to answer it honestly in the silence of your own mind. If the banks closed their doors tomorrow and the international SWIFT system shut down for a month, would you still own your wealth, or is your wealth merely a database entry on someone else's computer? If the answer scares you, then you know exactly what you need to do today. Don't wait. Execute.